Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today we again will take a look at the Great British Pound because as you can see the euro is dropping and dropping further, and in fact it has passed approximately 500 pips during the couple of sessions, so the action is really fast and it seems that our target around the parity could come even sooner than we expected. Still, market in fact stands just 500 pips higher than the parity on the euro currency, and it currently absolutely doesn't demand any update. It's no necessity for update situation on the euro currency because on the weekly research we said that our next target is the parity, and market just dropping to this target. So in fact we do not see any patterns has been formed there, so it's absolutely useful right now for useless right now for short-term trading. In the long-term perspective, we said that we know the target, we know that we should sell any rallies with in the long-term perspective to take the short positions on the rallies until the market will hit our target. Since parity is not just a psychological area, this is also the significant technical support. So if you remember, market is forming the butterfly pattern on the monthly chart, and the 1618 extension of the butterfly stands precisely at the parity. That's why there are some surprises could happen around the parity and market could react on this level differently. But this is a bit preliminary talk, so it's a bit early to speak about it. Let's wait when this happens and after that see what we could do there. That's why today we again will take a look at the Great British Pound, because market here is forming the short-term pattern that could be used in immediate trading. And since this pattern mostly tactical and doesn't demand any fundamental data analysis of the political and economical issues, so that's mostly technical. That's why we will take a look again in the Great British Pound, because besides we have here the progress with our setup. So on the daily time frame chart, situation hasn't changed significantly. Even on the first glance you could say that market may be even forming some kind of the bearish flag pattern. So maybe market will show the flag and will drop further. Well, that's really could happen, but still, to deny any setup that we have, we need to see the clear confirmation, clear moments that this setup has failed. And right now we do not have it. The context for the possible retracement stands mostly with the heading of the daily oversold around the weekly support 1. And also guys, 149.77, this area is the yearly period support. And in fact, this upward action mostly has been triggered by the existence of the strong support area and the weekly oversold. That has led market to this bounce that we have sold with our bread and butter sell trade. So right now, market stands at oversold of the minor scale. That's the daily chart, but still upward retracement could happen. And if we assume that reaction on the hitting of the oversold will be approximately the same as it was here, then market should reach approximately 5250 area. That's the context that we have discussed yesterday, and still on the daily time frame chart it is valid. Now on the forward time frame chart, that's most important for us, we see the progress with our double repo buy pattern that we would like to get. Yesterday we have said that we need the second bottom of the double repo pattern that will be approximately the same as the first bottom, and we have got it. So you can see market has formed perfect second bottom. They have approximately the same level, but what's more significant is that, take a look here, you can see slightly lower bottom than here. It means that market has formed shy wash and rinse of these lows. That's very good for double repo pattern. When the second bottom slightly lower than the first one, this is the positive sign. Shortly speaking, the major positivity of this issue is that when the market is breaking through these lows, the traders who trades on the breakouts starting to enter on the short side of the market. And when the market rebounds right back up, these traders who have taken the positions here appearing to be caught in the wrong direction. That's why the most probable area for their stops is right here. And when the double repo will start to accelerate, the stops will be triggered, and that will bring additional impulse to the upward action. That's why the second lower, when the second bottom is a bit lower than the first one, this is the positive sign for the double repo pattern. That's just how market works. So the one moment that hesitates us a bit is that the action here that we see with this double repo progress is not really very thrusting. So we would prefer to get something of that sort in the opposite direction when we deal with the double repo. But maybe we will see it a bit later. At least right now, we do not see clear signs that could tell us that double repo has failed. Even more, guys, take a look that here with this candle, in fact, we already have the confirmed double repo because we have the thrust down, close above the 3x3, and the market hasn't reached the 3.8 resistance. That's important for the double repo. Close below and creating the new lows, close above again. That's the confirmation candle. Despite how ugly and maybe a bit goofy looking this double repo pattern is. But the a bit lazy of this lazy action is a bit just a moment that hesitate me. Well, anyway, currently there's no clear issues that market has failed. On the hourly time frame chart, we see that this double repo is taking the shape of some kind of the wedge pattern, and take a look, it's accompanied by the bullish divergence with the MACD. And right now market is trying to show an upward breakout. So how we could deal with this double repo? Theoretically, we should take the long position because market already has been confirmed the pattern. If you will do this, you will have to watch for a couple of important moments. First of all, you need to place stop in an area that's very close to the lows but stands slightly above it, because it's no sense to place stops below the low, because you will probably be caught by the acceleration down, since stops will start to trigger and the market will accelerate when the breakout will happen if double repo will fail. That's the first reason why it's not really wise to place stop below the lows. And second, you could get some slippage if market will accelerate here. Besides, if market will return right back down to these lows, that's already will mean probably that double repo will fail, because this will be not very typical action for the double repo. When double repo has been confirmed, return right back down to these lows, it's not really good sign for the double repo pattern. That's why it's better to save some money and place stops a bit higher than this low stand. For example, you could place the stop right at the levels of this low. Second moment, if it will happen that market will return it back down and continue move lower, that will be the double repo failure pattern. That is also the directional. In this case, John Napoli framework suggests that you need to reverse your position to the downside. So you have to close your long, or your position will be closed by the stop loss order, and you need to take the short position, because that is the directional, also the directional pattern that probably will lead to the downward action. Where to take profit, that's not quite clear moment, because you, for example, could take the profit when you will return back your loss that you will get on the double repo pattern, on the direct double repo pattern. Second moment where you can take the profit, if market within the downward action will show the crossing of the 3x3. In this case, you could take the profit on the crossing of the 3x3. That's another moment how you could do this. So that's very difficult and not very simple to trade intraday double repo patterns, because it demands attention. You need to monitor the situation that's happening right now on the market, and you need to take the fast action when you trade the double repo patterns on the intraday charts. So but that is how experience come. So that's been said, here we have discussed all probably important moments that stands in relation with the trading of this current pattern. Let's see how it will turn today, but let's hope that our expectation will be approved and market will show the nice action to the upside that is pointed by the double repo pattern. So let's see what will happen here.